All right. Well, welcome. I am Artie Rai. I am the faculty director of the Center for Innovation Policy at Duke Law, and I really appreciate your braving this stormy morning and the construction that is still going on in this will be a wonderful facility, but there's a little bit of a challenge, I think, that all of you overcame in making it here, and I really appreciate that. Steve Merrill, the executive director of our center, is back there, and he is really responsible for putting this all together. So I want to begin by thanking Steve Merrill. I also have a couple of preliminary, largely logistical announcements. The first is that the agenda does not specify this, but there will be plenty of time for questions and answers. We've set the agenda up in a manner that will allow for lots of interaction. A second point about the agenda, the names of two of the moderators were inadvertently switched. So James Turner will be moderating the fifth session on policy options and trade-offs, and Bill Janeway of Warburg Pincus will be moderating the fourth session. So that's just another logistical note on the agenda. More importantly, we are just delighted to bring together leading scholars, policymakers, and industry leaders in this forum to discuss questions surrounding corporate research. We are very grateful to the Kauffman Foundation for funding this. They are our sponsor for every aspect of this conference. And with that, I think I will sit down and we will begin our first panel, which will lead off with some exciting data presented by Ashish Arora, and the moderator is Eduardo Porter of the New York Times.
Hi, good morning. This works? Hi, my name's Eduardo Porter. I work for the Times. I write a column called Economic Scene, and I come to this meeting maybe in a bit of a different position than you guys do. I mean, I'm not a tech person. I generally write about economics and policy. What drives me to the question that you guys are kind of addressing today, that Ashish is going to talk about now, is one that very much interests me from the perspective of what I believe is one of the greatest economic puzzles of our time and one of the greatest economic challenges, which is the really perplexing decline in productivity growth that we've experienced in recent years. Since 2007, productivity growth is barely inching along at a 1% pace, which is, less than half the rate from the end of World War II to the 1970s. And every economist that you talk to will project very low productivity growth into the future. So that redounds in low income per capita growth, and that kind of would lead to all sorts of social dysfunction. I mean, this is a really important problem for us. And what we're going to talk about today, what Ashish is going to talk about, is perhaps one of the root causes of what's going on. And so one wonders, is there a decline in innovation that is driving this? Is there a decline in research that is at the root of this? I mean, if you talk to Bob Gordon of Northwestern, this is an argument that he makes, that, innovation has flattened out, that we had this glorious period from the end of the 19th century to the 1970s. And then essentially that was over, with the exception of the dot-com bubble, which of great innovation and high productivity growth from the mid-90s to the mid-2000s. We are back to a normal of low productivity growth, and this is our future, and it's baked in. I find that a little bit hard. I find this whole scenario a little bit hard to make compatible with all the cool new things one reads about. One reads about CRISPR, one reads about AI, and every other day one reads about the robots taking away all our jobs, which again is in a lot of tension with this slow productivity growth story. In any event, it makes this forum extremely interesting, and I'm really interested to hear Ashish talk about what's going on at the very root of the chain of innovation, which is research. Is research, in fact, being short-thrifted? Is the private sector no longer going to be funding the basic research that is at the origin of all of innovation, technology, and so forth? So, without further ado, if you would,
Thank you.
take it from there.
Thank you very much. Right. So the first things first. This is joint work with Sharon Belenzon, who's in the back somewhere, and with Andrea Patagoni, who's not here, Leah Shear, who's here, and also with a lot of help from Hongi Lee and JK. JK is here, Hongi is there. A very special thanks to my colleague Wes Cohen, who played various roles from guardian angel to gadfly, and will continue to do that, I guess. Also, thank you very much to the organizers, to Steve and to Aarti for this, and to all of you for being here. Right. So the way this started, well, there's a set of slides here, but what I want to sort of, I started my academic career at Carnegie Mellon. My colleague there were both Wes and with David Hounshell, whom you'd hear from. And David has a wonderful book on the history of research at DuPont, which I read very carefully. And one thing that comes out of that is the tremendous, sort of, first the ebbs and flows, how DuPont got into research, how they got out of it, and, to try to get back into it, all the trouble they've had. The management, it's a management-centered book. It's about the difficulty of managing research inside a for-profit company. So that was sort of the germ of this idea to cut to the present, to sort of get to the end of this. When we got this opportunity, when we were looking at the data on publications that Sharon had put together, it struck me that maybe this was a time to go back and explore the sort of what you might think of as what David had suggested to me first, and what anecdotal evidence was suggesting, that that there's been this decline in industrial research, which once upon a time was a very potent source of fundamental discoveries, which you can see the slide here, and that anecdotal evidence was suggesting that that there was something going on here. So this project, Eduardo put it in very applied terms: what's going to happen to productivity, what's going to happen to standards of living. They started as a basic research project. In my mind, it still is. What's going on with research? It's I'm a little bit away from what it all means, and I'm happy to sort of engage on that. And of course, when you see these anecdotes, you also have the accompanying analysis of what's going on. Right? Is it sort of short-term managers, or sort of, is it a management problem? Is it capital markets, activist investors? Is it China? What is it? I'm not going to answer that question, by the way. This is just a teaser. Somebody else will answer that question. I have thoughts on it, but I don't have answers. Right. So this is the roadmap. I'm going to first show you data on is there withdrawal, particularly of large firms. I'll show you both sort of for all private sector, but specifically for large firms. Then say a little bit on why, and close up with, is there still a role for research? Has the nature of invention itself fundamentally changed, where we don't need research, contrary to what people have suggested? That the new sort of invention, IT invention, doesn't need research. So we'll see what the data tell us. And lastly, I'll show you a little bit on startups, because they're supposed to be the new savior. So I'll show you what we have on that. This is, if you're an academic and you give seminars, this is one of the first things you do is, before the audience gets to disrupt, you tell them exactly what you wanted to tell them. So that's my sort of money slide. If before you start throwing things, this is what these are the facts. Yes, in a sense, large firms are withdrawing. I'll make that sense precise. There's some notion of, is it an absolute withdrawal or a relative withdrawal? There's evidence that this is driven mostly by a perceived reduction in private value of research, and that these patterns are not driven by a particular sector, or it's not one industry. We all have our favorite stories about, but what about this? This is fairly broad-based across sector decline. The research continues to be relevant and useful for research, for invention, at least as measured by whether patents are drawing upon research, patents are citing research. By that metric, it absolutely continues to be relevant, particularly corporate research. So we have this somewhat piquant situation where companies are withdrawing from engaging in research themselves, but in their inventive activity, in their patents, they're drawing upon research at much higher rates. And finally, startups may be many things, but they're not an adequate substitute for the withdrawal of the large established corporations. Okay, so that's basically what I'm going to try and convince you of, and let's see how well I do. Sharon would kill me if I didn't have this slide, but basically you guys are not interested. Suffice it to say, a great deal of hard work went into this. Very little of it was done by me. Most of it was done by the folks I mentioned, the graduate students and others. But there's a lot of work, and Carol and I, in some ways, what you see here, what we're doing is sort of parallel to what NSF is doing, because they're trying similar things and looking at the relationship between academic publications and patents. And I think this is a good thing for private sector initiatives and government initiatives to sort of proceed and to learn and build on each other. Right. I'm going to start with NSF data. So these are not our data. These are NSF science and engineering indicators. I don't know. Oh, I guess, point to this. Whoops, that wasn't good. All right. Okay, let me just, you guys can hear me. This is this green dotted line. That's the share of basic and applied research in total business research. And you can do this many different ways. You can do business funded, business performed, business funded and performed. It doesn't matter. You still get this same basic result that starting somewhere around the mid-1980s, this share has drifted down. All right, that's the first starting point for all of this. Is however you cut this thing starts down. Some people want to draw comfort in the fact that it's flattening out in the last 2 years. I would say look at the evidence of the last 25, 30 years. This, that sort of, it peaked in 1986 was around 30% of research of corporate R&D was basic and applied research, and now it's about 20%. Okay, that's. Oh. Thank you. Okay. Are we good? If you want a different way of cutting this is if you look at total amount of research, basic and applied being done in the economy, what part of it is funded by the private sector? That's this red dotted line. And you can see that's bumped around a bit more, but even that's going down. Once again, there's some sort of flattening out here towards the last few years. That's it. These gray bars, this is the real, that is to say constant dollars, absolute business research. And there you can see things are, if you're an optimist, somewhat less gloomy in the sense that there was a high of about $55 billion, and we're trying to get back to that, to recover from what it was. But one way to think about this is there was a period of fairly substantial growth in real business research, and that growth is sort of flattened out. At least that's one way to think about what these figures are saying, right? Okay. And so this is from 1953 through 2015. We try to get to more disaggregate data by broad sector. And changes in definitions have made it really hard to do using NSF data. We've been able to do it for a shorter period. You can see 1996 to 2013. And broadly, I would say you see the same trend within sectors. So it's not, these trends are not driven by, say, the decline of chemistry and the rise of IT or some such thing. When you look within sectors, broadly defined, you still see a decline in the share. At least if you look over the long, over the entire period, there's sort of a general tendency to decline. Now, so those were official government statistics. You can think of those as input-based. Companies are surveyed. How much have you spent on R&D? What fraction of this was research? That's how those data get collected. A different way to do it, which is the way we've been pursuing it at Duke, is to look at outputs. So if people are doing research, then they're publishing, because that's how things work. And if they're publishing, we can track it, and we can link it to companies. And we can do more than just tell you trends. We can look at who's using this research, in other words, who's citing this research in their patents. Are companies that do research able to cite it in their own patents? How is that related to their willingness to invest in research? So there are some downsides to using patent data. The most obvious is somebody may not be publishing. But there are significant advantages to using this kind of publicly available, non-confidential data. One of the things that we can do is look within firm. So the NSF data I showed you show you the net effect of everything, changes in the composition of the economy, changes in which firms are in existence, et cetera. When you match to company level data, you can look within the firm, and you can track what's happening, what that company is doing. And we have a public platform that I'll share with you in just a minute that lets you can go and say, pick your favorite publicly traded company and find out what they're doing, what they're patenting, what they're publishing, and whose science they're using in their patents. Right. So what do these data show? So. All right. Is that good? Mm-hmm. Yeah. Okay. So this is for publicly traded U.S. companies that perform R&D and have at least one patent over their life. That's how you get into this graph. In any given year, what we're plotting is R&D intensity. So you can see the average R&D intensity has gone up, mostly because you have lots of small firms come in, which very high R&D intensity. Probably this is an interesting way to think about it. This is per firm patenting. And you can see there's been a steady increase in patenting, the number of patents taken out by each firm, by an average typical firm. There was this marked bump up, when we had the patent reforms. But even if you ignore that, there's been a clear, steady, and you could think of this as telling us what's happening at the D, the development end of R&D. Steady increase. Here are publications per firm. And there's been a steady, not a very sharp decline, nothing quite like that, but it's unmistakable decline in publications per firm. All the while, let me point out, companies are becoming larger, right? So the economy has been growing, companies have become larger. And if you think of these patents as telling us something about the R&D budgets, the share of research in R&D we infer is going down. In fact, we've done more formal kinds of econometric analysis where we've done all that, and it's very clear that companies are doing less on the publication side. And here, the same patterns, this is annual publication rates per firm within broadly defined sectors. And there are intersectoral differences, that's obvious. But you can see that you see the same pattern of decline over there. one advantage of using publications is we can use this for non-public firms, which I'll do, but we can also use it for firms outside the US. And this is our first cut at doing this for European firms. And you can see, especially starting in the 90s, there's more of a decline in publication output per firm for European firms as well. Okay. There's more evidence. We're showing you the raw data because I believe it's much better to show people data than stuff that comes after you've taken it to the basement and beaten the confession out of it. So this is sort of hands on the table. These are what the data show. If you do the sort of things that we get paid to do, the regression stuff, you still see the same results. There's a general decline in the share of effort going to research. One thing that's not in the data but is in the paper, most of this decline is driven by high impact scientific journals. It's not that companies are publishing less in the lower impact or more applied journals. This is driven by high impact basic science journals. That's those publications, basic science and engineering. Oh, and one thing, in case you're wondering, these data include both archival publications and what computer science people call, archival publications, as well as refereed conference proceedings. So if it's field agnostic in that sense. Right. Everybody wants to know why. We have one, this sort of the search for ultimate causes is a complicated one. I'll have a proximate answer for you, which is what we did was we divided all sets of causes into two big buckets. Supply side is research becoming relatively more expensive to perform, or the demand side is the private value of engaging in research falling. One way to do this, if you're an economist, is you draw a supply and demand curve. So this is the private value. This is what we think of as the demand for research. That red line is the cost. Now, if the cost was going up, what would happen? If the cost was going up, you would see less research. You could go Q0 to Q2. Less research is going to happen. But here's the critical thing. The private value, the measured value of research would increase, right? If stuff becomes more expensive, then the marginal, the last unit of research has to be worth more. On the other hand, if there's a decline in the value of research, so that's the dotted blue line now, then what you would see is you would see both the quantity, the amount of research being performed decline, as well as the imputed value. You say, how do you measure it? I'll show you how we measure it. But the important thing is this simple diagram, this simple figure tells us something about what at least the proximate causes. Because if it turns out that it's decline in the value or the demand for research, then of course that just is the first step of the inquiry. Why has private value declined? And then we're back to the kinds of things we were talking about. But let me just show you the evidence on this. So we did it two ways. For publicly traded firms, you can estimate the imputed value of the stock of publication. So there's a stock of R&D, there's a stock of patents, and so on. And so what you can see is before 1992, we just divided our whole sample period into two. So this is before and after 92. Before 92, if you were a company and you were doing research, your stock price reflected a premium. That's all that this says. It says, as far as investors were concerned, either the research itself or the fact that you were doing it or the kind of company that was doing research got a premium in the stock market. After 92, not so. Right? And in fact, you can see the error bar here, so it's actually negative. Investors don't like it if you declare that you're doing research, which is an offhand remark Ralph Gombry made to me, which is companies may still be doing research, they just won't admit to it. And this is consistent with that. Well, here, I was pointing at the wrong one. This is post-92. This is for patents. In the old days, patents didn't matter much, and now they're worth something. All right. So that's on the publicly traded side. You can say, well, that's stock market value. Who knows? Here's a different way to measure it. We can look at when companies get acquired, the price that's paid for them. And you can see the same patterns. In the old days, before 97, so these data, the sample period is slightly different, so it's before 97. When companies were acquired, companies that were doing research, publishing, got a premium in the valuation. After 97, not so. So whichever metric you like to see, whether stock market valuation or acquisition values, you see that the value accorded to research has fallen. All right. So this is just the same stuff again. One interpretation is companies value research less because research is just not useful for invention, for the thing it's supposed to be. Well, the answer is no. These are citations made by patents in our sample. These are publicly traded corporations, so large companies, you can think of them, as a fraction of all the citations they make. And you can see as a fraction, this fraction is increasing, which means increasingly companies rely on science, research, as an input into invention. And moreover, there isn't this fishing out hypothesis. So this is the average age of the science cited, which has remained absolutely flat. So it's not like we did a whole bunch of research in the 60s and 70s, and now we're just building off that. The answer is no. The average age of the paper cited in patents has remained absolutely flat. Now this is more recent stuff. So we looked at corporate publications versus scientific publications. And you can see a typical corporate publication is about 6 times more likely to be cited by a patent. And this pattern holds even when you look at 2 papers published in the same journal. It's not 6 times, but a corporate publication is still more likely to be cited than one produced by a university, even when the 2 are produced in the same journal. And I won't explain these other figures. The point is, this pattern is very robust. If you compare medians, if you compare modes, whatever you want to compare, you still get the same result. Corporate research is more relevant to invention than university research. Very quickly, who uses corporate science? Large firms themselves, as well as others. And this just repeats, says the same thing, which is, this is what's happening to publications in terms of citation. This line here is the total amount of non-patent references per patent over time. Once again, the message here is science is relevant, or research is relevant for invention. What's also coming out from here is where the science is coming from. This solid line is the share of internal research being cited versus the total research being cited. So you can see over time, companies are citing more external research, mostly by public, this is public research, from universities, nonprofits, that kind of stuff. But also other companies' research. And that tells us a little bit about what might be going on. Very quickly, startups. So, once again, this is still ongoing research. We've identified about 20,000 VC-backed US companies. These data are essentially for a quarter of that. We're still, or when I say we, I mean Leah, is still cleaning up. So if you want to do this in quantitative terms, multiply all this stuff by 4, because we have a quarter of all them. But you see the same pattern. They're focusing on development, not on research. And if you talk to venture capitalists, that's absolutely true. Venture capitalists have no interest in funding research. Right? And this is what we're seeing. This is total publications. If you're quantitatively minded, the total publications by startups are between 10 and 20% of the decline of the publications we're losing from corporations. That's one way to think about it. And this is per firm. You normalize per firm. You can see here, they're focusing on D, not R. I'm going to skip this. So I've mostly spent time on the facts, because that was my remit. Let me take a couple of minutes on what the possible interpretations are. It's tempting to, especially on this morning, to be a bit gloomy about this, which is, you know, the world's, there's decline, we need to do something about it, and then to start searching for both culprits and solutions. A different interpretation is that what we're seeing is a change in the American system of inventions, in some ways going back to what it used to be back in the 1860s and 1870s, where companies did no research and relied on external knowledge to drive their inventions and to drive growth. And what we're seeing now is what's different between 1950 and 2015 or 2017 is the tremendous growth in the American university sector. Right? Not that long ago, American students had to go to Germany to get PhDs in chemistry. Right? Now Germans come here to get PhDs. That means the world has changed fundamentally, and what we might be seeing, this is speculation, is a different division of labor where companies are going to go back and startups will play perhaps an important role in translating university research in a way that's digestible by big companies. Even if that were true, there's a lot of interesting policy and managerial challenges of how that system is going to work and how well it works. And I suspect you folks have more to sort of tell us on that or tell me on that, so I'll stop here on that. Thank you.
All right. Thank you very much, Ashish. I'd like to open this. We've got like a good 20 minutes for questions from you guys, which I'd love to hear. I'm going to take advantage of my position here to ask the first one, though. I was wondering if the issue is what you're suspecting is that it's becoming more difficult to appropriate the value of research inside the firm. Would you see, I wonder what you'd see if you looked at the research cited by patent. So if the research done in my firm, is it cited often by other firms? And whether that would be some measure of who gets to appropriate the value of this
Absolutely.
research.
Yeah, so you put your finger on it. So that's Leah's research paper. And the answer is yes. There is variation over time. So over time, there is more other companies are more able to cite your research, to appropriate or to take advantage of that. And when that happens, the company that was funding the research is likely to invest less in research, right? Mm-hmm. And to the extent that the company is able to appropriate its own research, mm-hmm. i.e. my patents cite my own research, I'm likely to continue investing. Mm-hmm. That's one of the robust findings that we have.
Very cool.
So yes, appropriability is an issue.
Yeah. So, sir, could you guys say who you are before I ask the question? Yeah, just identify yourselves.
Yes, we need people that take it.
It's
Oh,
not
yeah,
on,
he's-
so
I have one. Hi, my name is Yan Zheng. I'm in Senator Kuhn's office. I work on energy and manufacturing policy. There's been a link between manufacturing production capability and R&D. I think people have shown that firms that have production and R&D co-located are twice as more likely to do R&D and are more effective at it. As we're moving more of a production capability overseas, do you see, and also part of this drop in research, is that research going overseas and following production?
So I'm aware of some research, including by some folks who used to be colleagues at Carnegie Mellon, which had that view. Our data cannot speak to that issue. The one thing you must remember, though, is if production facilities move overseas, so will the development effort. And so what we're looking at, so even if you look at effort that's happening in the US, you still see a decline in the share of research. So it may, the factors that you're talking about may well be operating, but I think the trends are broader than that. In other words, even when you sort of just look at domestically occurring research and development, the share of research in that is falling.
Sir, wait for the mic, though.
My name is Ben Clements. Needs to be green. Okay. There we go. Hi.
Hi.
Hi, I'm Ben Clements with Treasury. I wanted to ask about how you accommodate how the number of journal pages per capita is slowly sinking as the number of researchers expands, but the number of especially top-tier journals is basically constant. And increasingly, people find it too expensive to just go through the refereeing process, suck up to the right editors, and instead will publish in SSRN or Archive or some other alternative that is not archival in the traditional sense.
So I think that's, so this is about, do you think whether this could be driving the reduction in publications? Is that the thrust of?
Well, per firm, absolutely, right? And I mean, if you just have a constant publication and an increasing number of firms, you would see that. And also thank you, right. Especially in the top tier, you would see those top tier journals. And also, I was trying to imagine what it would be like to be an editor in Science or Econometrica, and I'm publishing 20 papers this month, and I can choose between my colleague at Caltech or I can choose this guy from Microsoft, and yeah, the competition is a little more fierce that way.
That's a fair point. I mean, this fixity in publication output is always an issue. 2 points. One, you look at NSF numbers, where there's no upper limit on how much money you can spend on R&D. You see exactly the same patterns. So that gives me some comfort.
But R&D grants are also a competitive process, right?
Not inside companies.
Okay.
So that's one. The second thing is, if that were what was happening, so it's an artifact, I should not see the relationship that we've documented between your ability to use your own science in your patents and your investments. So within firm, we see when companies are able to cite their own science in their patents, they continue investing, and when they're not able to do it, and especially if their rivals are able to do it, they're less likely to invest. So I'm pretty confident that this is not an artifact of the fixity of journal pages.
Okay. Thank you.
Mylan Yeager with the Institute for Medical and Biological Engineering. Have you sliced your data to provide some conclusions regarding those who do industry that do research in medical and pharma versus energy or versus technology or traditional hard manufacturing?
Yes, we have, and to the extent that there's a sector that's, I wouldn't call it an outlier, but where the trends are not as pronounced, it's the biomedical sector. So we don't see quite the same declines.
Sir? Yeah.
On the supply side issue, Ashish.
Bill, you should identify.
Bill Janeway, University of Cambridge. On the supply side issue, Nick Bloom has yet another paper